Let's turn to portfolio positioning now, though, and I'm pleased to say, we're joined by Marcus Bogdan from Blackmore Capital via Skype in Melbourne. Lots to watch when it comes to portfolio positioning. Marcus, thanks for joining us on the program. As I said, there's a lot of macro factors where we've got to take into account at the moment. We've got budget, RBA, stimulus measures, the US election, to name a few. Is this playing into your strategy, or do you look past this?
Oh, absolutely mindful of the challenges that we've got in front of us. But I think what we're seeing in Australia is that we are actually in a pretty privileged position in terms of where we are in the pandemic. We're coming out of that. We're starting to see much better numbers in Victoria. And so the expectation of an economic recovery here is greater. And I think that the federal budget will also be constructive towards growth. So we are now starting to pivot the portfolios to more domestic names, because we do think, compared to the Northern Hemisphere, we are seeing incredible challenges around rising infection rates. You've got uncertainty around the election. And so now we're coming back and looking at quality Australian-focused companies.
Well, I know you've talked about adding to the banks in the first meaningful way in 5 years. So it's a big call for you to move back into the banks and add positions here. What's driven that?
Well, you're absolutely right. We've been underweight banks, and we still remain underweight, but we are just reducing that underweight position. Frankly, because valuations have come back significantly. The banks are no longer over-earning. We can see a trough in their earnings there. I think the regulatory changes potentially around responsible lending, coupled with a better outlook for the economic growth, I think will ultimately lead to improved credit conditions and improved credit growth, which will lead to the stabilisation of earnings and some growth going forward in the next 1 or 2 years. And we've also seen the dividends rebased to a much healthier payout ratio. And so I think we can see some level of earnings growth over the forecast period, and also an improvement once these dividends have been rebased.
And so when you see interest rates at these record lows and the RBA potentially cutting again in the next couple of months, certainly the calls are rising for that. What does that do to margins for the banks, and is that a big concern for you going forward?
Yeah, I mean, the impact on NIMs has been significant for the banks, and we do believe that we will remain in these record low interest rates. So that will be a challenge for the banks in terms of their margin. Some of that, and importantly, will be offset by, I think, an improvement of credit growth. And that will certainly help the banks. It will help their earnings, it'll help their capital position, and ultimately it will lead to better dividends over the forecast period as well.
Preference over some banks over others, or is this a general sort of equal weighting across the big four?
No, I mean, we hold the premium bank in Australia. That's Commonwealth Bank, which historically has got the strongest capital position. It's led on both loan growth and deposit growth. And I think it's further through the process of compliance. But we have recently added to Westpac, post the announcements there of the write-downs, and we do think that there potentially is a recovery there, both in earnings and dividends over the forecast period of time.
Can we watch what else you're looking at the moment? Because I know you've talked about good domestic plays. This is where you're sort of looking for value at the moment, given the fact that we are seeing that reopening theme looking more and more likely, borders obviously starting to reopen, and coronavirus cases down. So besides the banks, where else are you looking?
I think also for the first time, we're moving more into the energy sector. We see that as potentially recovering as transport comes back, through not only through industry, by personal driving, but also ultimately, I think as the states reopen and we look to get a vaccine probably in the early part of next year, that we'll see further demand there in jet fuel. And so Again, like the banks, we can see the bottom of the earnings cycle for the energy sector as well, and so we are more constructive on that sector also.
And in terms of auto, this is auto and businesses have been in focus here at home. We've had a couple of analysts come on the show liking them. In terms of the US and Europe exposure there also helping. Are there any stocks you like that sort of take advantage of these themes?
Yeah, I mean, Brambles, which is got the most significant part of their business in the United States and Europe, has called out in their results how affected they were with the downturn in the auto industry in the US and in Europe. You saw volumes there, collapse to around 40 to 50%. And our channel checks, both in the US and Europe, are suggesting that there is a very meaningful recovery happening in the auto sector there, where you're getting back to volume levels around 75 to 90%. And that will be certainly helpful for that part of the business. It's historically been a higher margin business also. And secondly to that, we're starting to see a recovery in beverages. Diageo, which is a global leading spirits company, has seen a recovery also in the US and in Europe, and that also plays well into Brambles businesses in those sectors.
Yeah, it's an interesting time for markets. Lots to watch, Marcus. We really appreciate your time on the program today. Thanks for joining us here on Ausbiz.
Thank you, Ingrid. Cheers.
Marcus Bogdan there from Blackmore Capital out of Melbourne.